Welcome to WealthStream Academy. Today we'll explore the lowest amount needed to live off dividends. In this video, we will explore the intriguing topic of living off dividends and the investment required to achieve this financial goal. Our primary purpose is to reveal the actual amount of investment needed to sustain a lifestyle funded by dividend income. Many people harbor misconceptions about dividend investing, often believing that a substantial fortune is necessary to generate a meaningful income. However, the reality is that with the right strategy and understanding, it is possible to create a reliable income stream from dividends with a more modest investment than one might think. This video aims to clarify these misconceptions and provide a realistic perspective on what it takes to live off dividends. The appeal of financial independence through dividends is undeniable. Imagine having the freedom to pursue your passions without the constraints of a traditional job. By investing wisely in dividend-paying stocks, you can build a portfolio that not only grows over time, but also provides a steady income. This journey toward financial freedom is not just a dream, but a tangible goal that many have achieved. Join us as we delve into the specifics of dividend investing, uncover the truth about the necessary investment, and inspire you to take the first steps toward a life supported by passive income. Your path to financial independence could be closer than you think. Many individuals are increasingly seeking to live off dividends as a means to achieve financial independence and security. With the average retirement age hovering around 65, there is a growing desire among people to retire early and enjoy life on their own terms. The allure of early retirement is a powerful motivator, prompting many to explore alternative income sources that can support their lifestyle without the constraints of a traditional job. Dividend income stands out for its simplicity and passiveness compared to other income streams, such as active employment or even rental income, which often requires ongoing management and effort. By investing in dividend-paying stocks, individuals can create a reliable source of income that flows in regularly, allowing them to focus on what truly matters to them. This passive income approach not only reduces the stress associated with financial obligations, but also provides a sense of security. Moreover, living off dividends grants individuals greater control over their time. Instead of being tied to a 9-to-5 job, they can choose how to spend their days, whether that means traveling, pursuing hobbies, or spending quality time with family. This newfound freedom is a significant draw for many, as it allows them to design a life that aligns with their values and aspirations. Ultimately, the pursuit of living off dividends is about more than just financial gain. It's about reclaiming one's time and enjoying a fulfilling life. There is a prevalent belief that millions of dollars are required to live off dividends, a notion often perpetuated by various financial videos and resources that suggest unrealistic investment amounts. Many of these sources present figures that can be intimidating, leading potential investors to feel discouraged about their ability to achieve financial independence through dividends. However, it's essential to challenge this misconception and recognize that living off dividends can be accomplished with a more attainable investment than commonly thought. A classic example to illustrate this involves calculating one's living expenses and determining the required investments to cover those costs through dividend income. For instance, if your annual living expenses total $40,000 and you aim for a conservative dividend yield of 4%, you would only need to invest around $1 million to generate that income. While this may seem like a significant sum, it's important to note that many individuals can start with smaller amounts and gradually build their portfolios over time. By reinvesting dividends and making consistent contributions, the path to financial independence becomes more feasible. Ultimately, the key takeaway is that living off dividends is not solely reserved for the wealthy. With strategic planning and a realistic approach, anyone can work towards achieving this goal, regardless of their starting point. Calculating the cost of living and factoring in inflation is crucial for anyone considering living off dividends. Understanding your monthly living costs is the first step in this process. For example, if your current monthly expenses total $3,000, that amounts to $36,000 annually. However, it's essential to recognize that these costs are not static. They tend to increase over time due to inflation. Historically, inflation averages around 2–3% per year, meaning that in just a decade, your $3,000 monthly expenses could rise to approximately $4,000, significantly impacting your financial planning. This increase underscores the importance of not only calculating your current living expenses, but also projecting how they will evolve over time. To ensure that your dividend income remains sufficient to cover future costs, it's vital to account for this inflationary pressure. If you plan to rely on dividends for your income, you must ensure that your investment strategy generates returns that outpace inflation. This means that your dividend yield should ideally exceed the rate of inflation, allowing your purchasing power to remain intact. By proactively addressing these factors, you can create a more robust financial plan that safeguards your lifestyle against rising costs. Ultimately, understanding the dynamics of living expenses and inflation is key to achieving long-term financial independence through dividends, ensuring that your income continues to meet your needs as time goes on. When comparing high-yield investments with dividend growth investing, it's essential to understand the underlying assumptions and limitations of each strategy. High-yield investments often attract investors with the promise of immediate income, typically offering dividend yields that are significantly higher than the market average. However, these high yields can sometimes be misleading, as they may indicate underlying risks, such as a struggling company or unsustainable payout ratios. Investors may assume that these high yields will provide a steady income stream, but the reality is that such investments can be volatile and may not deliver consistent returns over time. On the other hand, dividend growth investing focuses on companies that consistently increase their dividends over time. This strategy emphasizes the potential for compounding effects, where reinvested dividends contribute to portfolio growth, leading to greater income in the future. By investing in companies with a strong track record of dividend increases, investors can benefit from both capital appreciation and rising income streams, creating a more stable financial foundation. Moreover, the required investment amounts for these two strategies can differ significantly. High-yield investments may require a larger initial investment to generate substantial income, while dividend growth investing can be initiated with smaller amounts, allowing for gradual accumulation of wealth. Ultimately, while high-yield investments may offer immediate gratification, dividend growth investing presents a more sustainable and potentially lucrative path to long-term financial independence. Reinvesting dividends plays a crucial role in accelerating portfolio growth and maximizing investment returns. When dividends are reinvested, they are used to purchase additional shares of the underlying stock, which can significantly enhance the compounding effect over time. For instance, consider an investor who holds 100 shares of a company that pays a $2 annual dividend per share. If the investor chooses to reinvest those dividends, they would acquire an additional share each year, gradually increasing their total holdings. In contrast, if the investor opts to take the dividends as cash, their portfolio growth would be limited to the original 100 shares, missing out on the potential for exponential growth. To illustrate this further, let's look at two scenarios over a decade. In the first scenario, an investor who reinvests dividends sees their initial investment of $10,000 grow to approximately $25,000, assuming an average annual return of 10%. Conversely, if the same investor takes the dividends as cash, their portfolio might only grow to around $15,000, highlighting the stark difference that reinvestment can make. The importance of reinvestment in achieving financial goals cannot be overstated. By consistently reinvesting dividends, investors can harness the power of compounding, allowing their investments to grow more rapidly and helping them reach their financial objectives sooner. Ultimately, reinvesting dividends is a strategic approach that can significantly enhance long-term wealth accumulation and financial independence. Taxes play a significant role in shaping dividend income and investment strategies, adding layers of complexity that investors must navigate. When modeling taxes on dividend income, it's essential to consider various factors, including the type of dividends received, qualified versus non-qualified, and the investor's tax bracket. Qualified dividends are typically taxed at a lower rate than ordinary income, which can influence an investor's overall return. However, the intricacies of tax laws can make it challenging to accurately predict the net income from dividends, as changes in tax policy or individual circumstances can impact outcomes. Moreover, taxes can increase the total contributions needed to achieve specific financial goals. For instance, If an investor aims to generate $40,000 in annual dividend income, but must account for taxes, they may need to invest significantly more to cover the tax liability. This means that the effective yield on their investments is lower than anticipated, requiring a larger initial investment to meet their income targets. Given these complexities, it is crucial for investors to incorporate tax considerations into their financial planning. Understanding how taxes affect dividend income can lead to more informed investment decisions and strategies that optimize after-tax returns. By proactively addressing tax implications, investors can better align their portfolios with their financial goals, ensuring that they are not only focused on gross income, but also on the net income that will ultimately support their lifestyle and aspirations. As I reflect on my journey toward achieving financial independence through dividend investing, I find it essential to share my personal insights and projections. My timeline for reaching this goal is set for the next 5 to 7 years, during which I plan to steadily build my portfolio by focusing on high-quality dividend-paying stocks and reinvesting my dividends. This approach not only aims to generate a reliable income stream but also allows for the compounding effect to work in my favor. I believe that with discipline and a clear strategy, financial independence is within reach, and I'm excited to see how my investments will grow over time. I encourage all of you to join me on this journey and share your experiences along the way. Whether you are just starting or are already well on your path to living off dividends, your insights can be invaluable to others in the community. The beauty of dividend investing lies in its collaborative nature. We can learn from each other's successes and challenges, fostering a supportive environment where everyone can thrive. By engaging with one another, we can build a strong community of like-minded individuals who are passionate about achieving financial freedom. Together, we can exchange strategies, celebrate milestones, and motivate each other to stay committed to our goals. Let's embark on this journey together, sharing our stories and supporting one another as we work toward living off dividends and enjoying the financial independence we desire. As we wrap up this discussion on living off dividends and effective investment strategies, let's recap the key takeaways. First, we explored the importance of understanding your cost of living and factoring in inflation to ensure that your dividend income can sustain your lifestyle over time. We also compared high-yield investments with dividend growth investing, highlighting how reinvesting dividends can significantly accelerate portfolio growth. Additionally, we discussed the impact of taxes on dividend income, emphasizing the need to incorporate tax considerations into your financial planning. Now that you have a clearer understanding of these concepts, I encourage you to take action. If you found this video helpful, please subscribe to our channel, like the video, and share it with friends or family who might benefit from this information. Your support helps us reach a wider audience and fosters a community of individuals eager to learn about financial independence through dividends. Furthermore, I invite you to explore our related content, where you can dive deeper into specific investment strategies, tips for building a dividend portfolio, and personal finance insights. Join our community by leaving comments, sharing your experiences, and asking questions. Engaging with one another not only enriches our understanding, but also creates a supportive environment where we can all grow together.